Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I want to talk about mortgage rates for this week. We've had some changes and we've been talking about those throughout the week, and they've been very popular videos because there's been some unexpected drops in mortgage rates this week. You see, December is not really a month that you need to drop rates because it's such a short month. There's really only 2 weeks where solicitors, estate agents and everybody is all working at the same time. And so if you cut your rates, it kind of goes unnoticed. It starts kicking into effect again in January. We've also got the fact that in the budget recently, we've got stamp duty that we know is going up. Now, that means the market is a little busier than it normally is. And so that means that lenders don't necessarily need to cut rates as if the market was quiet. So it is something to consider, and some lenders have cut rates, and you're going to see those here today. There are some lenders that weren't there last week that are now offering the cheapest deals in the market again. Now, there isn't much below 4%. There's a few buy-to-lets that we'll talk about that are, but most of the rates are actually higher than they were in October, and that's because the market has shifted somewhat, and it's the uncertainty with the budget. The markets want to see, how is that going to play out? Is that going to lead to job losses or businesses that ultimately fail? And what happens when Donald Trump comes in? Is he actually going to put tariffs on everybody and start this big trade war that he talks about? Or is that all just bluster and negotiating tactics? We need to see after January the 20th what actually happens. So the first one I want to look at here is HMO mortgages. Now, this is a very good strategy, especially in this market. I'll give you an example. So right now I'm in Dorking in Surrey. And in Dorking in Surrey, if you rent out on a room-by-room basis, you will get £850 per room per month. But if you go down the road to Leatherhead, which is 4 miles from here, the costs go up significantly. And the council in Dorking will give you £850, but in Leatherhead, they will give you £950. So imagine if you took a 3-bedroom house and then you made 2 of the reception rooms bedrooms as well, made a nice kitchen for everyone in there, and targeted this at professionals, you could get nearly £5,000 a month in rent in that scenario, which is pretty crazy. So HMOs are similar to student accommodation. It's a high profit, high cash flow strategy. And the Mortgage Works, which is part of Nationwide, has the best deals as they did last week. The 5-year deal is 5.29%. They will lend you 75% loan to value, which is pretty good. And the fees are 3%. So if you're splitting those fees over 5 years, it's not so much. It's not so bad, that rate. And I think that's a pretty solid rate, especially as you get high cash flow. 2-year deal is lower, 4.74% here. And that as well has the same fees, a 3% fee, and they'll lend you 75% loan to value. So HMOs, there's tons of videos on this channel. If you want to know more about that, go to the channel, type in HMO. If you want to learn more about that strategy, it is a good strategy for high cash flow. Next, buy-to-lets in limited companies. These are what you need to invest in now. And I started this channel a couple of years ago now for my daughters. I've got 2 daughters. I've got Georgia, who is 24 next week, and Amelie, who is 3 years old, who is 4 next week. Both their birthdays are next week. And so I've invested for my daughters. I've got Georgia a couple of properties, Amelie 1 property so far, and we've done those in limited companies now. That's how the new deals need to be done. So Mortgage Works have got some good deals here. 4.99% for a 5-year deal, 3% fees, 75% loan to value. So under 5%, that's good for a limited company mortgage. They're always a little bit more expensive. The 2-year deal is 4.89%, 3% fees, 75% loan to value as well. So that's a good option for limited companies. But most people that have buy-to-lets historically have them in their personal name. That's where the chunk of my portfolio is. So personal buy-to-lets, these are some of the only deals at the moment that you can get that are below 4%. So the Mortgage Works have 2 great deals here. You might need to go through a broker to get these deals. Sometimes you can't get them going direct. So if you do struggle, go through a broker. They can get rates that others can't. The 5-year deal is 3.99%. They've got rid of the percentage fees and gone for a flat fee of $2,250, 75% loan to value. The 2-year deal is 3.59%, and the fees again are fixed fees, 2.250, and that's what a lot of people want. Obviously, if we can get these fees back down to 500 quid, or even some back in the day, you used to get paid to get a mortgage. Some of them gave you like 500 quid or $1,000 that you could use for your solicitor and stuff like that. So Mortgage Works nationwide, go and check them out. Now, residential mortgages. I know that's more viewers than anything. We've got a new deal here, which is good, and it's competitive. So we spoke earlier this week, or I did a video on NatWest. They've been competitive most of 2024. So when they haven't been the cheapest, they've often left it for a few weeks and then they've come back and undercut everybody. And again, that's what they're doing here on the 5-year deal. They've gone to 4.21%. And these are on 25% deposits or 25% equity. So 75% loan to value. Fees on residential mortgages are way better, £995. So that's much better there. Now, Barclays, these guys have been competitive. They've cut rates this week as well. Not in their best deals that we're seeing here, but they have cut quite a lot of their rates this week. So they have a 2-year deal at 4.35%. £899 is the fees, 75% loan to value. So good options there on those ones. And let's lastly have a look at the residential market if you have a small deposit. So it means you're purchasing with a 10% deposit, or you have 10% equity if you're doing a refinance, remortgage. Virgin Money, ironically, is also part of Nationwide. They bought them. So Nationwide, as last week, are being very aggressive in getting market share under all of their brands and sub-brands that they've got. Virgin Money 5-year deal is 4.59%, 995 in fees, 10% deposit, 90% loan to value. Right, that's pretty good. There's a lot of risk because some of you on this channel think the market's going to drop 20%, so they could be in negative equity if that did happen. So it's a good rate considering they get more risk than you in this scenario. The 2-year deal, just a smidge under 5%, 4.98% with some 995 fees. What do we expect going forward? Now, I don't think you're going to see many more rate cuts this year in 2024. I just think the reason people cut rates is to get market share and get people in when they're doing applications. But applications will slow down significantly. My broker has already said it's going quiet already because people are already decided they're just going to wait until January for new transactions. Now, these rates are based off something called the swap rate, the SONIA swap rate. That did drop. After the budget, it went up, which is why after the budget, mortgage rates went up. It has dropped a little bit now, which is why NatWest, Barclays, TSB have cut their rates in the last week. So potentially in January, if it stays where it is, you could start seeing a few more small drops from lenders. You're not going to see loads. A lot of it is dependent on the Bank of England. If they cut rates, the swap rate will go down and you will start seeing better mortgage rates next year. So that's it on mortgage rates. If you found a deal that's better than these, always comment because it helps. Thousands and thousands of people watch this video every week. So do comment if you found a better deal and people can go and check that out. Some of these deals, if you can't find them, go through a broker. They can get rates that you can't always get on the comparison sites and stuff like that. Anyway, that's it from me. Do check out all the other videos. Quickly give this video a like. That will help YouTube push it out to more people. And check out all the other content on my channel, including this video right here.